Dear Chartered Accountants, working professionals, and students in the domains of Indian auditing, accounting, and the tax and regulatory space, welcome to podcast of Fca Deepak Rao, a practicing Chartered Accountant.
Daily news and updates for 5th October 2023. In a game-changing move, Misho, the e-commerce unicorn, has officially thrown open its platform to sellers without a GST registration effective from October 1st, 2023. This strategic decision by the company is poised to have far-reaching implications and is anticipated to potentially unlock access for a staggering 1.5 to 2 crore sellers, primarily hailing from historically under-penetrated states, to join forces with Misho. The groundbreaking development follows a recent directive from the GST Council granting e-commerce platforms the green light to onboard non-GST registered sellers with an annual turnover up to Rs 40 lakh. This directive not only signifies a pivotal shift but also represents a significant boost for Misho, a startup backed by SoftBank that harbors ambitions of onboarding a whopping 1 crore businesses onto its platform by 2027. SEBI has extended the timeline for mandatory verification of market rumors by listed entities. As per proviso to Regulation 30 subsection 11 of the SEBI LODR Regulations 2015, the top 100 listed entities by market capitalization must verify, confirm, deny or clarify market rumors from 1st October 2023. This has now been extended to 1st February 2024. Similarly, the top 250 listed entities by market capitalization were required to mandatorily verify, confirm, deny or clarify market rumors with effect from 1st of April 2024, which now stands extended to 1st of August 2024. The GST Council is set to meet on October 7th to consider extending the concessional tax rate of 18% on vehicles purchased by visually impaired persons, exemption on millets sold in powdered form, and clarify levy of tax on bank and corporate guarantees provided by directors and promoters to a company and its subsidiaries. UK clothing brand Superdry announced on Wednesday that it has signed an IP joint venture agreement with Reliance Brands Holdings UK for the sale of Superdry's intellectual property assets, including the Superdry brand and related trademarks in India, Sri Lanka and Bangladesh. Reliance Brands and Superdry will own 76% and 24% of the joint venture respectively. RB UK is held by Mukesh Ambani's Reliance Retail Ventures through its subsidiary Reliance Brands that has been Superdry's franchise partner in India since 2012. Reliance Brands will continue to oversee the brand operations in India, Sri Lanka and Bangladesh. Superdry will transfer its IP assets in the territories to the new JV entity and invest £9.6 million or $10.8 million in the entity. Reliance will continue to be supplied finished goods by Superdry, sold at standardized commercial terms. Google has introduced its new lineup of Pixel phones, watches and earbuds, aiming to challenge Apple's dominance in the market. The Pixel 8 and 8 Pro are priced closer to Apple's counterparts, have similar flat-edge screens and offer face identification for payments. The starting prices of the phones have been raised by $100 each to reflect the upgraded displays and cameras. Despite Google Android's operating system running the majority of smartphones globally, its own hardware accounts for just a fraction of sales.
This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.